Cloud. Hey, make sure to mute everybody on the way in.
Yeah, they had his coach called him and has it. They teed off on one at like 7:45. So I'm like, dude, let's get out there. That's a full time to just hang out when no one's around,
Yeah.
you know?
Let's see here. I made everybody in here. You know, okay. All right. Let's see here. All right. Hey, everybody. Welcome. And a lot of people on the call today. Hopefully, we can add some value. Actually, Eric and I are both not where we normally are, but we're going to do our best to make this happen. So, yeah. So I think, Eric, I get you on mute, so you're gonna have to unmute yourself. So you can't talk without.
Oh, there he is. Yep.
Perfect. Yeah. So, today what I want to do is we sort of reset at the beginning of the year. I want to go back to some of the basics on some of the stuff that we do as we have guests come in, things like that. It's important to schedule them relative to, because that's all part of the process. But the main thing I want to focus on today, we're just going to talk about is on, establishing the value, right? Like what is, I want to talk about what owner finance value means, what as is value means, and what what ARV means, or after repair value means, relative to the creative deal side. I mean, we know what it means by definition, but what does it ultimately mean in the world that we're in, right? So, that's sort of where we are, right? So, so if anybody's got a property or something that they want to add, then we can go through it, and I'm gonna see if I'm mobile right now. I'm traveling, so I'm gonna see if I can get my whiteboard to work. So the one thing, see if I can share the screen and switch over here. Give me 1 second. I think it's right here. Let me turn it back on. Shut it off here. Yeah. So share. Okay. Let's see if this comes on. I'm gonna require cancel. Why? I just had. Oh, I had an AirPlay. Give me 1 second. Trying to run all the controls here. Let's see. Oh, there we go. Can you guys see the whiteboard now?
Yep, I can see it.
Okay, because everybody else is muted. Eric, you got to be the one chiming in. So these are the couple of things that we really want to talk about. Okay, I call it what I call is my MAOV, which is it's really, you can look at it either as a minimum or a maximum allowable offer value, owner finance value. So I like to use minimum as the number, and this gets back into that 75% rule. So somebody throw me, and this is gonna be a little hard today because I can't talk and move screens. Eric is mobile, so he usually would chime in and do this. So somebody want to give, let's just pick up, anybody have a property? We can just put it in the chat box. I'm just gonna pull one up and we're just gonna walk through some of this stuff. Anybody's got an address, and we'll just sort of walk through that. And maybe what we'll do is we'll, whoever throws one in the chat first, we'll pull them up and we'll just go live with it and sort of walk through, sort of setting the stage for all these topics here, the ZFEI, the rent value, and stuff like that. So if we don't have one, I'll just pull one up myself. That's not a big deal. I wasn't planning on doing it this way, but there we go. Let's just see. So there's Juan. Juan, are you unmuted right now? Let me see if I can.
Yeah, I'm here.
Cool. So Juan, I'm going to ask you to talk a little bit about this. So we're going to establish we're going to talk about this and try to figure out what we would do with this property. Okay. So what is the purchase?
Sorry, that I put in the
Eric,
wrong ad.
can you add people from your side or not? I don't know. I'm asking Eric.
I don't think I can. I do not think I can. Hold on, let me see.
This is probably not the day to do the demonstration, unfortunately, but I can't keep adding and do this all at the same time. My screen doesn't show it all. So.
Oh yeah, I don't know. I don't think I can add. I can't add from my phone. Sorry.
All right, no worries. All right, every time I try to add, somebody else comes in and I just can't do it all. So anyway, we'll manage it. So Juan, tell me about we're gonna figure out, what are you buying this? What are you contracting this property for?
We're looking at 100 right now.
So 100. So 100.
Okay.
You're not gonna let me do this. Let me just my figure. What? Oh, okay. Let me just start a new one here. This is the problem when you try to do things on the road and it does not want me to do it. So let's just go like this. Let me just do, give me an unknown error. I don't know why it's doing that. Well, we might not be doing this today. Let me see if I can get another. Okay, let's just do it. Okay, here we go. All right, cool. What's you say it's about 100K? No, it does not want me to do this. Sorry, guys. It is not like my, cannot add a new one. I don't want to reboot. Let's just go back. And if it doesn't work, we'll just have to improvise it without a screen share. But let's see. Goodness. Stylus does not want to work. Well, I apologize, but it's not, technology is not cooperating today. Not recognizing anything.
Maybe we can have someone in the group. You give all the numbers and we'll let them screen share and at least show it so where we can see it when we're done.
Yeah.
Or write it down. I mean, the math's still gonna.
I'm gonna reboot it. I'm just gonna. Yeah, I should have never tried to do this with all by myself. It doesn't work that way. I'm trying to reopen Notability here. See if it lets me do it. All right, let's try this one more time. There we go. Okay, let me share my screen again. I had to restart it. Let's go here. Give me 1 second. There's the share screen. All right, here we go on. Let's get ready to roll with this. And we'll be good to go. All right, perfect. So we got 100K is the purchase price, okay? Okay, what do you think the ARV is?
139.
Okay, it's called 140 is the and are you calling that the ARV? What are you calling it? As is value? What's this 140K?
That's ARV, all fixed up, you know.
Okay, and how much do you think you need to spend to fix this up?
Probably 10,000, just cosmetic, you know,
Okay.
paint, just paint inside, fix it up a little bit.
Okay. All right. So if that's the case, then let's look at these numbers. So we talk about the 75% rule, right? So did you run the 75% rule on this?
Yeah, so that
Okay.
will be at it was one. I have to sell at 133. You know, the 130.
Let's just see here. So it's under 150, so we probably want to use a 70% rule, but let's just pull it up and see what it comes out to be.
Yeah,
so
142.
So if we take 100, right? So we take 100.
Right.
And we divide that by point. I'm going to say for that area, I'm going to say 0.72. That gets us 140,000. Okay, so we're right about there now. But you didn't add in the $10,000, so you needed to do it 110, then do it. Okay, because you got to add that cost in there. All right. So
right, okay. That's
part of it. But I'm gonna tell you right now, if you're doing $10,000 in repairs, means you probably should be doing 0. Okay. I haven't seen the pictures yet, but let's assume that for argument's sake that we're not going to do the repairs. Okay. Because we want to solve for owner finance value. Okay. And we want to know what that means. So do we know what the rent value is on here? I'm going to put it on this side over here.
Yeah, 1,200.
1,200. Okay. And did you run a ZFVI on this? Just curious. You know what that is?
Yeah, isn't that the Zillow index value?
Yeah, so if you go on Google, I'm not gonna shift screens. Just go to Google, type in ZHVI and then the zip code, okay?
All right.
And tell me what that number comes out to be.
Yep, right here. So that is 185.
185?
Right.
Awesome. That's perfect. So what I see right now that I like about this is that we already are in this price point of 140 and our median home price is 185. So that means that we're below that price band, which is good, which is where we want to, we
Okay.
don't want it to be the other way around. We don't want the value, the index to be, say, 140 and we're trying to sell something at 185. Not that we can't do that, okay? It's just, we want to make our chance to get in and out of these deals much quicker. What I see right there, right off the bat, is that we can move this house extremely quick based on historical performance. That should not be a problem. That also tells me why I don't really need to do a lot of rehab, right? Because if the median price is 185 and we're selling a house at 140, 150, that there's going to be a lot of people that are going to see that as a tremendous value when they go to buy. Does that make sense?
Gotcha. Yeah, it
All
does.
right, cool. All right, so that's there. So the next thing I want to do is I want to solve for the minimum owner finance value relative to rent value, okay? So what I'm gonna do, give me a second, I'm gonna have to share, I'm gonna have to stop share and pull up another screen here. And this is another big one too, and a lot of people, this is how we come in and establish this. So give me 1 second. I gotta pull up another screen here. Switch over. And where is it? I gotta pull up my calculator on there. Okay, let me share this. So do you know what taxes and insurance are about on this property?
Yeah, it's
It doesn't have to be exact. What we want to do is we want to deduct it from the rent value because we're going to figure out what the ownership value is here. So I'm going to share my screen again while you're pulling that up. It doesn't have to be exact. We can just
yeah, about that 22. Let me see, going to 10. Last one I saw is 2,200 for
2,200 a year for taxes.
Yes.
All right, so let's just call that 100 a month, okay? And insurance is probably another 100 a month, okay?
Right.
So what I have here, my rent value is 1,200. I'm going to subtract 100 for the taxes and 100 for insurance because renters don't pay taxes and insurance, right? The owner of the property pays it, which is who you are if you're making this a landlord, okay? So
Correct.
we're going to call that $1,000, okay? So what we're going to do here is we're going to solve for a payment of $1,000 and see how much we're in line with this number. So we're going to solve for the balance. I'm going to set this rate. I don't know what usury laws are in Florida, but I'm just going to set it at 9.5%. Okay. So I'm going to put that in there and now I'm going to solve for what the balance can be. I'm going to hit calculate. I want to see how close we are on this deal. So now as you can see my screen, it's basically $19,000. Okay. So what does that mean? It just means if we're trying to sell a property on owner finance and we want it to be competitive to rent value, where ownership is equal to or less than rent, then we need to, I get on the screen. That's sort of weird. Then we need to take that in consideration. So we're about $20,000 off on it. Does that mean we can't sell it at 140? No. All we're saying is when I go and change this right here, and I'm going to solve for payment now, and I change this to 140. Okay. And I solve for the payment now. The payment's going to go up to 1177. Okay. That's P plus I, payment and interest, payment in principal and interest. Okay. So the question we have to ask ourselves here is that, is somebody going to buy, because remember, we're charging an interest right here.
Right.
Are they going to buy it for basically $1,400 a month, or are they going to rent it for $1,200? See what I'm saying there?
Right.
So now
Yeah.
it becomes a much more subjective decision on behalf of the borrower, because the borrower is buying on payment 95% of the time. They're not buying
Right.
it on rate. They're not even buying it on price.
Mhm.
Payment is the question. So the question becomes, will they own it for 1,400 or would they rather rent it for 12? Okay, so I'm gonna go back to my screen share here. Okay, give me 1 second.
Yeah, and that's where I was kind, that's the question I had.
Yeah. Now, what I will
Okay.
say, so let me go back to my screen share and switch this over here. I'm gonna stop share and switch it. Give me 1 second. Just got, I'm trying to do, and I'll get to the questions in the chat. I know Terry's got a question, and we'll go there in a second. So just give me, I'm gonna just wrap this up real quick, and then we can go back and see if this is a deal or not. So, let's see here. You should be able to see my screen again here, okay? I'm gonna change
Yep.
this pin color here to another color, so I can get it to work. And change it to green. Okay, so here's what we know, okay? And this is really something, if you put it in the modeling software, you can see this really quick. But here's what I want to say on it. Here are the things that I like about this deal, okay?
Mhm.
One, the sale price is far less than the median, okay? We've got, switch this over here, but the pin's not working. That's okay, use my finger. We have 185,000. My pin is not working. Okay, I'm not sure it's gonna let me do it or not. There we go. So we got 185,000 is the value. We're at 140. That's in our favor, okay?
Okay.
We got a $200 difference between ownership and value, okay, and rent value.
Got it.
It's gonna just detract some buyers, but at the end of the day, we only need one, okay? So I'm probably not as concerned about that right there, okay? Would I like it to be a little closer? Yeah, but that's okay. That's why this doesn't work the same in every market, because rent values are different, right?
Right.
Rent values, and then the higher you get on a price point, even the bigger variance you get, because a $300,000 house doesn't rent for $3,000 a month. It might only rent for $1,800 a month. And there's investors out there that buy properties as buy and hold. Why, I don't know, where they go in and they have it in there and they're waiting for appreciation on a property to get the value, which I think is just not a smart strategy. So the question is, I wouldn't do rehabs. I haven't seen pictures, but assuming that's the case, I would probably come in here. I think I would probably look at this maybe closer to 150 on the price. And
Okay.
then I would probably look at, if it is in good condition, you probably want this to be 12 to 15K down if you can, okay?
Okay.
And then put it in the model and see that it works. I like this right here. Like I said, that 185 is a good number, assuming it's accurate. And here's the other thing. You can go into the comps and you can go find the realtors that are selling stuff in that area and ask them how much this is this in demand? Like some of the questions that I want to know is, what is days on market, right? What is the days on market? I want to know
Okay.
what days on market are, right? Because if we're at 120 days on market and the average inventory is only, 30 days and we're at 120 in this particular area, what does that do? Okay. So we definitely want to have that. We want to know that too.
Okay.
But here's the thing: if you get into a situation and you're in a buy for a buy, and you have to put $10,000 in it, okay, to do it, and now you're in it for 110. If you were going to be a landlord, and we're not talking about being landlords here. If the worst
Right.
thing is you had to make this a rental property, are you okay if the rent value is $1,200 a month and you're in it for 110? Right?
Yeah.
Not the end of the world, right?
Right.
That's why we
right.
like to have the multiple exit strategies on that. I'm not buying it to do it as a rental. And where's
Right.
this in Florida? What's the major city this is in?
It's actually a small town. So the Naples,
What's the
Florida.
nearest major city?
Nearest it would be Naples,
Naples,
Florida.
Naples?
Correct.
Okay, how far is it from Naples?
It is 50 minutes.
50 minutes, okay? So what direction is it?
Southwest, Florida.
Southwest of Naples? I thought you were in the Keys when you got down that far, no?
No, the Keys is no. We're in Southwest,
So
Florida.
you're southwest of Naples, okay?
Mhm.
Okay. Not horrible. I mean, look, here's the thing. There's a lot of people moving to Florida.
Yeah,
There's a lot
we
of
see
people
that.
moving to Florida, so yeah, I don't think you have to worry about that for a minute. And this is a single family residence, it's not a manufactured home or anything.
No, it's a single
All
family.
right, cool. Perfect. Awesome. All right. So I am going to do you have any questions on this? Does this make sense to you?
It does. So when you're just a PI, PI, they're 111177. You based it off 118. That's where I got lost there. So you
Yeah,
want that to
so I don't-
be
Well, no, I'm just solving for the paint. All I did here is I'm trying to make. We know the rent value is 1,200,
Right.
okay? So when I solve for initially 1177 is based on our sales price. The
Okay.
original number to solve it for this $1,000 a month, that was the 119. Okay.
Okay.
Well, you
Yep.
don't want to sell it for 119. You're just
Correct.
right. You're trying to sell it for more than what you have into the deal. I mean,
Right.
that's where your profit comes from. So we're solving it both ways. We're trying to figure out what the match is. Because a lot of times you'll match it and it could come in $30,000 above what you thought you were going to sell it for. That's a whole different game, right?
Right.
It happens. And so the question that you need to ask yourself, am I selling it for too little based on the fact that the value is a lower number? Okay. So I would say
Gotcha.
just throw it in the model and save it and look at it and run your calculations. I would say the note value for Florida. I don't know what the default's in it. I think you're at 90%. Okay. I think
Okay.
90%
Gotcha.
is probably okay. Okay.
Okay. Gotcha.
At that price point. And
Okay.
just because you get under 150,000, it changes things a little bit, but I think
Mhm.
you're pretty close to know what that ultimately looks like. So I'm gonna stop share here. Just fill it out. If you want to send it over, just send it over and we can look at it and respond back to you. Okay. So let me go into,
Perfect.
I'm gonna go to the chat real quick and look at these questions. And let's see what we got here. So Corey had one in Cumberland, New Kent, Virginia. And then we have a couple more. Terry had one in Kansas City. Let's see, let me read what Charles said. Oh, Charles was just talking about, he had just bought a note. Can you put me on? Yeah, Charles, we'll get you taken care of. And I wanted to talk to you on that. Charles has actually bought a note that we created about 4 or 5 years ago. And I was talking to him so we'll follow up with that on too. Let's see, what is ZFI? So Doug, ZFI, I don't know where you came in. It's the Zillow Home Value Index, okay? And then you just go in but you got to add the zip code, okay? So you want to search for it and then add the zip code. You used to be able to find it on the website on Zillow. You could just like bookmark it and you could just sit there and put all your zip codes in and you can get the number. It doesn't work that way anymore. So you have to actually go in and put ZFVI. Okay. All right. Let's see here. Yeah. There's Eric after the fact replying. Okay. How do we come up with rent value? Yeah. So rent value, well, we didn't solve for it here. Juan told us what it was, but you can use things like Rentometer. You can use Zillow, sometimes shows the Zillow rent value, realtor.com. You can search for that stuff. Rent value is pretty easy to find. Let's see, Corey, does it work? So Corey says, does it work on properties with above median values, but where the numbers are really good? Yeah, absolutely. So think of it, all it is a bell curve, right? We want to try, if you draw a bell curve and you draw a line down the middle, which would be the median, we want to be on the left side of the bell curve, if possible. Doesn't mean there's not good deals on it. Hey, look, if the median is 200 and you got a $300,000 house, okay, and you're picking it up for $200,000, we'll find a buyer at $300,000. It's just like a pyramid. The higher the dollar value is of anything, the narrower it is at the top. And you're going to have less buyers that can qualify for that. You're going to have a higher interest rate, higher payment. Can you find a buyer? Yes. I mean, we've done this 1,100 times. I don't own any houses that I was not able to find a buyer for. The question becomes, how long is it going to take? And, because we talk about velocity and all this stuff. If it takes, we want to try to get this stuff done in a couple of days. We don't want to wait and hold something for months, right? Well, at that higher price point, you may have to wait, a little bit longer to get to that point. So, Peyton says, have a property I'm moving forward on in Jackson, Mississippi. Going to make a great note. Awesome. I would say, Peyton, just, you guys gotta, we want to really understand, we can help you, point you guys in the right direction for referrals as far as the structuring all this stuff, how to underwrite it, title companies, things like that. But understand the model defaults to 90% on the note sale value. Now, there's a lot of factors that contribute to that. One is the buyer's underwriting file. Another one is this property, where's the location of this property? Is the value really what it's supposed to be? Can you, is that a judicial or non-judicial state? All these things have impact on note value. So the 90% is just sort of a default. But if you're in Illinois, man, I would probably be modeling this out at 85%. Okay, because Illinois is a horrible state to have notes in. It's a horrible state from being a judicial state and just getting things through the process. Other states like New York and New Jersey are very difficult too. Florida used to be bad; it's getting better. But if possible, non-judicial states are much better because they don't screw around. And look, that's the beauty of this model. You guys can take this model and find, if you're not doing repairs, Juan, are you still on? I'm gonna ask Juan, if you're not doing repairs, Juan, Juan, are you living in Florida? Juan, unmute yourself if you can, because we're already talking about it. Is this deals in Florida? Are you physically in Florida?
Yeah, I'm in Florida.
Okay. So if this deal was in another location, okay, Alabama, Georgia, Texas, wherever, okay, and you didn't have to do any repairs and it fit the model, would you have a problem doing a deal in another location if you're not doing repairs to it?
Not at all.
Not at all. You shouldn't. That your answer should be no. All right. The problem most investors make, they try to do deals in their backyard, and that's great if your backyard is where you should be doing deals. Right. But a lot of people try to do deals where they shouldn't be doing deals. And to make matters worse, they try to do the wrong kind of deals where they work. You have to understand where you are. And you also have to know what deals work. And not all deals can be structured the same way. This deal may be this seems like this would be a horrible fix and flip deal, right? There's not enough money in it. You'd have to put $30,000 in to get the max value, and then you're over market on it. But if it could be a great buy and hold. All right, could it hotel it? Yeah, hoteling is sort of the same thing as what we're doing. So so I would say look at these, but what I would say right now, like creative financing, Texas is Texas is a large state regardless, but it's by far the biggest state to do creative financing, and over 20% of all deals nationwide are done in the state of Texas. And the reason being is a lot of things. One, people are moving to Texas. Number two, the properties are better in general. They're not, you go in the East Coast to get east of Mississippi, you're dealing with a lot of early 1900s properties, man. Those are old. Those are not going to last forever. So there's just little things like this. And when you got to look at it from the note buyer's perspective, when you're a note buyer, those are all the factors that we need to take into consideration when we establish the value, because the note, when we write a note for 30 years, and if you're going to hold the note or stay in the deal, those are all value. Those are all parts of the checklist that need to be evaluated, determine what the true value of the note is. So let's see here, and let's see. I'm going to look here and keep going down these questions. Can I get information to find out an RMLO servicing company that would understand what I'm trying to do? I don't know. Eric wrote that. I don't know what that means.
I responded and said, we use Call the Underwriter for underwriting, and we also use FCI. And if you're in FCI
Yeah,
lender services,
all that stuff's in the master class, man. It's all
Yeah.
there, just on
Yeah.
the resources. So yeah, and it all depends, right? And depending on what state you are, will determine who you should use and why you should use them. Trevor says, hey, Nick and Eric, are mobile homes in a park a good idea when having to pay lot rent? I'm not gonna tell anybody what's a good deal or not a good deal. That's a personal preference. I will tell you this. I have done over 1,100 transactions. I don't know, Eric, you've done over 1,000. I have never owned a mobile home in a park. So my answer to that would be, for me, it would not be a good idea. If it was on a mobile home and it was sitting on a half an acre of land and it's deeded that way, that's a different story. But you having
there's business models that people go buy a $2,000 trailer in a park, sell it for 10 on terms, but then they get paid back in a couple of years, and there's not a stream of income. So I'm not a big fan of that model.
But if you don't own the park, is that a good idea?
No. People have strategies around it. We just don't do that. We do houses. That's what makes sense.
Yeah.
But someone had a question on, do you do an option agreement so you can capture the appreciation? And what I tell them is, my amortization is my appreciation. That's my new.
Yeah.
I think I'm gonna. That's my tagline. Can I trademark that? .org.
.org.
No, like my appreciation, my amortization is our appreciation. If you start running appreciation or amortization calculators, and you'll see what we're talking about. That's why the banks exist.
Well, I mean, in theory, I guess you could always do it that way until you get the depreciation and convert it over. I don't know. I'm all about the easy button for me. And if it's not easy, I don't do it. I will say
that we say, well, just go do another deal and you'll offset whatever tax benefits you get. It's just do another deal.
And I've said this many times. I go, what do the banks do? Because we want to emulate the banks. I want to think, act, and be a bank. At the end of the day, do the banks do that? Is that what the banks do? No, they only control. They don't own anything. So
someone said Jack Miller beat me to the amortization is my appreciation. That's funny. Remember Jack Miller? Yeah. I don't know how old everyone is on this call, but he's really old and I'm old too. I literally went to events at his house. Oh, remember that?
Yeah.
In Florida, and he would pull up in his old station wagon. He'd show up in a station wagon, and the guy, when he passed away, no one even knows where half of his assets were, because he created such a great model of anonymity that I don't even think his family knew what he has.
Yeah, no doubt that. So let's go. So 1% rule for Terry says 1% rule for our maximum buy price. So Terry, were you asking a question or are you making a comment? As a matter of fact, you got your hand raised. Just go ahead and why don't you just unmute yourself and just ask the question or make your comment.
Can you hear me, Nick?
Yeah, go ahead.
Okay. There was a question previous to that. It was a question mark. Can we use the 1% rule in some markets to determine our maximum buy price?
I don't know. I don't know. I don't do enough on the rental side to understand that the rationale behind the 1% rule. I don't know who thought that was a good idea or why you shouldn't do it. So I'm not going to really comment on that, because I know that hedge funds are buying stuff at 0.70%. So what do they know that we don't know, right? So 1% rule, I think, is a little bit. I just want the deal to work, okay? And here's what I want to be able to do. I put it in the model, I spits it out, and it tells me if it's a deal or not a deal. And if I have enough data, I'm going to make the best decision based on the data I have. And it's not a perfect model, but it works the majority of the time. And what it allows us to do is it allows us to evaluate the deal from the beginning very quickly in a matter of a minute, right? You can go put that stuff into the analyzer and put that stuff in it, and you can see right away whether the deal makes sense on the numbers you have, and it allows you to go pull the trigger If you're buying it from a wholesaler, which is hard to do these days, then that's a value. If you're getting it direct from seller, that's it. The other thing it allows you to do is it allows you to go solve for the acquisition price, right? So we don't have the model for Juan, but Juan, if you want a minimum profitability on the deal between cash and a note, and you want it to be, say, $20,000, we'll solve for it. All you gotta do is go, you're not gonna adjust the sales price and you're not gonna adjust the down payment. You're gonna adjust the buy price, right? So adjust the
Correct.
buy price on what your strike price can be to get you to the profitability you want on the deal. So
What I was gonna say, Nick, is one of my mentors said, your return is your return. It doesn't mean it's everybody's return. There's people out there that'll die for a 5% return and $100 a month, where you and I won't touch a deal for under 500. It's
I
just
think,
perception and time.
100%, and it's all about their patience of their capital and
I
everything.
mean, we
There's a
have
lot
people
of-
that buy our notes that come in and they're retirees, and they go and they look at cash and they can get 0.5%, right? CDs don't work,
Yeah,
bonds don't work, but they would love to get 300 payments at 6% interest secured to a piece of real estate that we underwrote. So they're like, where do I sign up? We'll give you 6% on that all day long. And they're happy as hell. And you know what? It pays their it pays their insurance, and it pays their bills, and they know they're going to get a coupon every day. Well, who's on the call right now? He's had a note with you that you underwrote and did 5 years ago, for God's sakes.
yeah.
It's like a coupon. You didn't do anything. You just paid for it and got paid, right?
Yeah, exactly.
And here's the guys, this is what Nick and I, this is why we do this. We're doing deals. We're always going to do deals. It's never going to change. The opportunities are forever because there's always opportunity for seller finance buyers. Okay. Our goal is to teach people like you, or at least open your mind up to the opportunities, to where through our network or whatever, we help 1,000 people have home ownership, and you guys are part of that. And that's what we wake up to every day, is having the opportunity to share this with you. So that's the deal. I mean, and then not only that, how many investors do you have that can't get a return because they're scared to death of the stock market and they can't get more than a 1%, even close, in the savings account? So then you get an opportunity to help them get a great rate of return tied to real estate. So you can just go on in the way this expands and benefit, right?
Exactly. So, couple more questions. So how does 100% funding with hard money lenders work? How do they make money on us, or why would they lend? Well, first of all, they're going to lend on the asset, first of all, right? So that's what the model does. If you go into the model and you put it in there, it's already got the default cost of capital in there. They're going to lend on the asset. That's how most hard money.
They make money on dollars lent. That's how they make money. It's up to them to
They
lend you
always
the
want to
money.
make sure that it works, that the deal works, right? So they are your litmus test to determine whether you're making a good investment or not, right? Because here's what you would do is that you would go in, and what I do is I go figure out what the maximum value would possibly be for that property and what the repairs would be to get there. And that's what I would submit to the hard money lender. Doesn't mean I have to go fix it. I can buy it and try to sell it as is. And if I sell it as is, I'm out of the deal. But if it doesn't fit, doesn't work that way, and I use hard money, well, then I have the money already in escrow to use it for repairs if I need to go fix it. So you don't want to do this if the fix and flip model isn't a viable option. Okay. So if fixing and flipping it to sell it for a retail fix and flip doesn't work, you probably shouldn't be doing this. All we're saying is that you don't have to fix and flip it to get the same result or a better result because of the speed of doing the deal. But what you don't want to do is model this out this way and not be able to sell it for those numbers. And then you do go fix and flip it. You want to go fix and flip. That's what we talked about. With Juan earlier, it's like, hey, if it costs you 30 to sell it, and now you're at 150 and it's only worth 140, that's probably not a good business strategy, right?
There's not a better deal when Nick and I see a deal and they're like, I think it's going to be 12 to 15, 10 to 15 in rehab. And we're like, holy crap, that's a home run. Because guess what? We're not going to do the 10 to 15,000 in rehab.
Yeah.
We're going to recoup it on the sale
No,
price.
we're looking for grandma houses, man. At the end of the day, we're looking for grandma houses where somebody just lived in a house and grandma lived in it, and she's been living in it for the last how many years, and she hasn't changed anything. She hasn't updated anything, but it's perfectly clean. It's perfectly safe. It's
You
perfectly.
can shower in the
good.
showers. You can use the toilets. You don't have stuff hanging all over the damn place. And
Yeah.
and you can get someone else in there so they can do their sweat equity and provide home ownership for
Yeah.
themselves
see,
and their family.
yeah, no, that makes total sense. But my question is, can you guys hear me?
Yeah, go ahead.
Oh, okay,
Yep.
yeah. So my question is, what I'm trying to put my head around is, if we're using a hard money lender or even private money, my big question is, how do we cover, if we are really going to fund this deal at 100%? I'm just trying to wrap my mind around, hey, what about EMD? Hey, what about closing costs? Hey, what about, why would a hard money lender give us 100% to cover all of that? So that's what I'm trying to wrap my head
And they're not
around.
going to give it to you if you don't ask for it. because, yeah.
Ask Nick at 12% and 2 points, how much money his hard money lender gave him at 100% financing and how much money he made. It's ridiculous. So that's why you pay them, and then they don't lend them the money if it's not a deal. So you just ask
Yeah,
for
I
it.
mean, you may have to float the earnest money up front to get that done. I don't know. Every hard money lender is going to be different. I can just tell you what we do because if they don't want to do it, I'm going to go find another hard money lender. I
Yeah.
fully disclose the model. I could care less if they know how much money I make.
Got it.
And at the end of the day, do you want this or not? Because the more money they know that I make, the better off their investment is. Because what I do is not speculative. I can promise you
Yeah.
that. A fix and
Yeah.
flip is a speculative model, right? That is for sure. So I think that's sort of it. And it's all education. But you know what? I come from a different position because I've done this hundreds and hundreds and hundreds of times. So I
Yeah.
can answer those questions. You may have to give a little bit on the front side. I had to give a lot in the beginning until I understood it. And then I came back and the shoe was on the other foot because the hard money lenders will start drinking the Kool-Aid too, from the standpoint of, hey, dude, this guy's got his act together. They do what they say they do. They perform, and they're not coming up with a bunch of excuses on how not to do the deal. And there's also hard money lenders out there that'll give you, if you're not doing repairs, well, they'll give you 100% funding on the deals, and then you're responsible for repairs. Okay, well, if you're not going to do the repair anyway, then what difference does it make?
Yeah.
Right?
Then you're
It's a little bit dangerous though, because if you got to really know your market and that you can do that. And because if you do have to go fix it, you got to have the capital to do it, or you have to go find it someplace to be able to do it. Okay.
Yeah.
So does that answer your question?
It does. Yeah. No, I appreciate it.
All right, super. All right, I'm gonna let you go. Let's go down the next question here. What is the masterclass link? So yeah, if you go to the creativedealmaker.com, you can get to that. And there's a 3-part video series. If you haven't watched that, cash now, cash flow, cash later, you can do that. If you have already watched all that,
I just put it in the chat. It's creativedealmaker.com/training. It's in the chat.
yeah. And if you don't want to, and if you want to go, if you've already seen the videos and you want to get more information, you just want to get the masterclass, you can go to cash now, cash flow. I'm putting it
No,
in the
it's
chat.
it's the training.
Cash.
It's creativedealmaker.com/training will get you
No.
into the group.
Trust me. Trust me. They're already in the group. They're in the group right now. Otherwise, they wouldn't be on this call. Cash now, cash flow, cash later is the direct link to go in and get right to the masterclass and order it. Okay.
Well, I'm on the site, so you can do either one.
Well, if you go to
Why?
creativedealmaker.com, okay, so now you don't have to watch the videos anymore.
No, if you go to creativedealmaker.com/training, it takes you to the place where it says click here for immediate
Oh, okay.
access. Yeah.
Gotcha. Same difference. Yeah.
That's why I put it in there.
Yeah,
Yeah, it's the
okay.
same, but I just want 2 options.
Yeah, you can bypass it, but you got to put the.
But that gets you guys,
training in there, right?
It gets it more detailed. It gets you guys to understand the modeling on how to use the worksheet. It's all in there. Everything's in there.
Yeah, perfect. All right, super. Let's see here. Go back up. Let's see here. Tech's got a deal, I think, in Livingston, Texas. So, hey, Tech, if you got this and you're looking at it, put it in the model. Okay, download the model, put the model, follow the instructions, and then send it in, and we'll take a look at it. Maybe we can partner with you, or at least help you get the deal done if you need to do it. Doug says you're not that old, man. Yes, actually, he is, Doug. but that's for another conversation. So I know. Doug, I need Doug to stop
Hey,
doing deals in New Jersey.
if anybody knows Jack Miller and actually met him, then they're old. That's how I look at it. That's me.
Yeah, see, now, and Pete comes in and says, damn, you are old, Eric. So see, you got a little debate in the group between Doug and Pete on really what old is and who is old. Can you post the latest iteration of the analyzer? So yeah, so what you can go to I want to put it in here right now, cashflowdealmachine.com. Okay. Cashflowdealmachine.com. Sometimes Google's a little slow and you might have to go back and refresh, but it should work. Okay. You can download it there. When you download it, you can go in there, you can watch the video and you can see everything you need to know. And then if you want to submit something, you can do that as well. Okay. Let's see here. How much equity? Let's see. Question: is the modeling software in Node Unlimited, or is that in another piece of software? So I think it is over there as well, but I know the revised version is in the link that I just posted in there. Okay. So Gary, I would just go into, we've done some reiterations and stuff, and I'm not sure. I would always use the link that I shared because we have it as a redirect. And then every time we make updates, the newest version is always going to be underneath that link. Okay. How much equity are you looking for, Gary? So William was asking, must have been another question I missed. But maybe William just can direct message Gary on that question. Gretchen, hey Gretchen, do you still use hard money lenders or do you use your own funds at this point? That is a great question. I never use my own money. Why would I use my own money? I never use it because I can promise you I can outperform 12.9%. Way I look at it, right? Plus, here's the other thing I'm going to do is I'm going to run out of money. I mean, I'm not, if it, when I can borrow money, I can scale and replicate that. So I always leverage.
Little lunch.
And even if I didn't, and even if I did use my own money, I would still pay myself as if I was the lender, right? Even I would always treat cash because there's an opportunity cost associated with the cash. It's just not sitting idle in the bank account.
So Nick and I had a conversation the other day about it. It's like, if you use your own money, will you ever run out of money? Yes, unless you guys are,
If you never would run out of money, Eric, they wouldn't be on this call. I could tell you that.
That's right. So the answer is you go find the unlimited sources of it as much as you can, hard money lenders, whatever, and just do it. Don't worry about what they're making. Just do more deals. Do more deals because there's an unlimited supply of seller finance buyers. So that's the answer to that question, don't you think?
We have a lot of people that do have a lot of cash, and I say, look, take the cash, be your own internal hard money lender, lien the property, and use it, but pay yourself. Don't take the money. Like, here's the biggest piece of advice I can give you. Let's just say you do want to use your cash because you don't like the borrow and you don't want to go through. I get all that. Okay, just telling you what I do and what I don't do. But make sure that you model it as if that you are the lender and use some form of interest and expense to those numbers. Because what I don't want you to do is to go in there and zero all those out because it's cash and get a false sense of security on what the deal is truly worth. Okay. Be careful with that. Okay. That's all I would say. Because the model is based on borrowing. Because 99% of us will borrow in the model. And if it works with borrowing, then it's going to work with cash, obviously. So it's just an opportunity cost. All right, let's see. Hope that answers your question, Gretchen. Let's see here. I'm moving to Texas in a couple months. Doug, come on to Texas. Get out of New Jersey. Or where? I think you're New Jersey. It might be your New York. It's one of those states. You need to hook up with Win. He's on here. He's in New Jersey doing deals in Texas right now. Got a lot of people that are outside of the state of Texas that are actually doing the deals. Tio says, where can I find the VA resource materials training? That is under, I think it's
I put it in the chat. It's startvirtual.com/CDM.
Yeah, I don't see it in here. Where did you put it?
Here, let me put, I'll repost it. Hang on.
Yeah, I mean, it might have gone to him directly, but yes.
Yeah.
When it says I'm in New Jersey involuntarily, that happens.
Did you see it? It
Yeah,
came in the
there,
chat.
now, yeah, now
Okay,
it's
good.
on. Okay.
So if you go to startvirtual.com/CDM, Nick and I retire off of that affiliate
Yeah.
link.
We make
Just so you know.
$1.40. I think we make $1.40. So it doesn't even pay for my extra super size.
No, that's total. That's total, not per hour.
Then we got to split it, and we got to pay taxes on it. Thank goodness I live in Texas. I don't have to pay state income tax on it, but Eric, you do in Arizona. Onboarding in 10 minutes. Nice, William. Those guys, what I love about those guys, and I'm not trying to say there's 1,000 VA companies out there, okay? But here's what I will tell you about those guys. They are investors first, and they built the whole model around being an investor just like we are. Unlike other VA companies that build it to provide the service. So they sort of reverse engineering. So Peyton says, hey, what zip code do you and Eric like to buy notes in? Ooh, that's a good question. It doesn't, I don't know if I go by zip codes because there's more to it than that. It's the asset itself. It's the buyer underwriting file. It's how good was the collateral file that was created? Was it a contract for deed, or was it a deed of trust or mortgage? Is it serviced? Is it not serviced? Or taxes and insurance escrowed or not? I mean, there's a lot of factors. I think we talked about the F-150 example at one point in time. That's very similar to that. And I tell you what you guys should do if you guys if you get into go to the Cash Flow Expo 2022, they talk about something very similar to the value of the note and why value is important and why most people get it wrong. We talked about this before. It's a $25 billion business, seller financing, owner carry note business. And of that $25 billion, 95% of it is probably, it's not written illegally. It's just not written for consumption.
It's like fix and flipping a house and doing it incorrectly. Where obviously there's a guy on our call today. He bought a note from Nick 5 years ago, and it's still cranking because it was done correctly. The borrowers.
Yeah, I mean, I think that's really the biggest benefit of it. Charles, are you still on the call? If you're there, just pop, because you buy notes, right? So I mean, you bought notes and you come from a different position. Charles, if you're there, just pop on in and say something.
Yes, I do. I buy notes. Interested in the model, and as I mentioned the other day, though, you had introduced this model. You and Eric introduced this model some months ago in a different forum, and I looked at that, and there was just something in the back of my mind. But at any rate, I buy notes, and I happened to notice that one of the notes that I bought was one that you had created in 2015 in Arlington, Texas, and I bought that a hedge fund or an investment fund. I think bought it initially, and then they were liquidating. I bought it from them, and it's been a great note.
Well, and thank you for that, Charles. And what I will say about that's what we do, right? This is where most people fail, in my opinion. And Charles, you probably looked at a lot of notes over your note buying career. Here's what I do know: when we write the notes, and if you follow the protocol and the process, it's going to give you the biggest opportunity to get the maximum value back on the note. Okay, and when we wrote all those notes in the beginning, most of our buyers were financial institutions, right? Banks bought a lot of our notes. Hedge funds bought a lot of our notes. There wasn't necessarily the mom and pop. So we had to write from the very beginning quality paper to get maximum value out of it, in providing the least amount of discount. Now, I'm sure Charles would love to buy everything at 50 cents on the dollar, but the key to this whole model is providing an asset class, in my opinion, that's readily consumable and extremely desirable. Because at the end
And
of
I
the day,
didn't buy that. Pardon me, I didn't buy that at 50 cents on the dollar either. I
I'm
bought
sure
it
you didn't.
at an acceptable yield.
There you go. And that's exactly the answer that everybody should have. What's acceptable to you is not acceptable to me, or is more acceptable. It's all personal. Here's what I know. There's $3 trillion sitting in IRA money out there that's losing. They call them savings account, but they call them expense accounts because the inflation's outperforming what those dollars are gaining and earning right now. But at the end of the day, there's a buyer for all this paper that we create. The question just really depends on a handful of factors, and you just cannot really answer it relative to one or two questions. That's why, in my opinion, the most critical component of all this is writing it at the highest interest rate that you can possibly write it for and still keep it qualified in a conforming mortgage, because that's going to beat inflation more than if somebody writes a 4% mortgage. You're going to have to discount the hell out of it if somebody's looking for an 8 or 9% yield. And we're not going to get into this right now. We might break down the note side of it later, but understand, if you go through the protocol and you follow what's in the class and you do what we say you should do and you follow those protocols, that's going to give you the maximum value on that note, regardless of where it is. And it's probably going to be at least 7 to 8 points higher than the national average that people are selling stuff for, relatively speaking. Okay. So if the national average is 80% in Illinois, you're going to probably get 87%. If the national average is 87% or 85% in Florida, you're going to probably get 92%, or at least close to those numbers. Okay. Anyway, so we got another call coming at the top of the hour. Let me just make sure we didn't miss any questions. If you got Texas deals, use the model, send them over. We'll take a look. If you have any, if you're not in the master class right now, it's extremely reasonable. We could care less if you buy it or not. It's on the links in there, but all this data is in there. All these deal or no deals are in there. All the archives are there. And it's just another strategy that you guys can look to implement it if it makes sense. And if you really are hands-on and you like to touch and feel everything and you like the fix and flip model, then that's cool. And then do it how you continue to do it. But if you're truly trying to get away from that, I think this gives you an opportunity to diversify and, more importantly, get out of trying to do deals where you live. That's the biggest. I've been fortunate enough to do deals. Well, see, I live in Austin now. I don't even do deals in Austin. I still do deals in Texas, but I don't do them in Austin. So I'll never probably do a deal in Austin unless it's a seller finance deal. But one last question here, and then we're going to roll. It says, what a good email to send you Texas finance lead. Send everything to support@creativedealmaker.com. Okay. Support@creativedealmaker.com is by far the easiest way to get. It'll come into the system. Our team will funnel it out. If it needs to get to Eric or myself directly, they'll make sure they get it, but they need to take all that documentation and everything and put it into the file anyway. All right, guys. So thanks again. I think next week, I'm confirming we're going to actually have our national private lender on the call. Okay. So anything relative to private lending, it's either going to be next week or the week following. We're trying to get them scheduled. So, a lot of these private lending questions in different states that you may have, hopefully they'll be able to answer those for me, and also give you just a resource to have another lender to send deals to as you get it done. So there you go. All right, guys, you guys have a good night and good day, and hopefully we'll see you on the call next week. Take care.
Later, guys.
All right.